Over the last couple of days, if you've been paying attention at all in the financial news, you know that the stock market is once again going gangbusters. After having somewhat of a muted fall up to this point, after the election, and seemingly the chaos that occurred during said election night, and the following days, the Dow Jones Industrial Average, the S&P 500, the Nasdaq, and other major indices over the world have been growing with almost no reason behind them. Almost no reason. But the question on everyone's mind is, should I get in now? 3 words. Yes and no. In this video, I'm going to talk about why right now is the best time to get into the stock market. I'm also going to talk about why it might not make much sense to get into the stock market right now. And in addition to that, I'm going to try and make sense of what seems to be mostly inexplicable stock. And in addition to that, I'm going to try and make sense of what seems to be a mostly inexplicable stock market bull run. What's up, folks? You're watching Finance Squared. So I'm going to go ahead and get this out of the way right now. Go ahead and murder that like button like it owes you money. This video is chock full of value and advice, and doing that satisfies the mystic YouTube algorithm. That'll help this channel and others like it grow. So if you don't mind, just go on ahead and do it now, just to get it out of the way. That way we both can relax and get into the meat of this content. Much obliged. But the last couple of days of market activity in the stock market has been interesting, to say the least. Or that sort of undersells it, really. Stocks have been going through the roof ever since the November election and the win of Joe Biden. The truth is, though, we probably should have seen this coming. As a matter of fact, savvy investors and those of us who study the history of the stock market have come to realize that the stock market, a particular index of that market rather, I'll get into which one in a moment, so stay tuned, generally does pretty well following an election, no matter which candidate wins. As a matter of fact, according to a CNBC article, please see the description down below, in every election in November since 1944, the S&P 500 has risen 0.8% on average. Now, I know what you're thinking. 0.8% doesn't sound like a lot. And yeah, you're right, that isn't a ton. Comparing election year Novembers with all other Novembers, it actually is pretty darn poor. But the December of an election year is when the numbers for stocks tend to improve. December in general is good for stocks, just like December in general is good for retail and the economy overall. Something about closing out the year on a strong note, and of course the holiday shopping that occurs right around this time, encourages the economic juices of peoples all around the globe to get out and shop and invest and all that good stuff. But in election years, Decembers of those years, U.S. stocks typically gain 84% of the time versus all other Decembers since 1944, presumably when they started tracking this sort of activity. Like I mentioned earlier, no matter which party won the election, in the 2 months afterwards, stocks tended to gain. But if you look closely, you'll see a particular trend. If a Democrat wins the White House, the November of that election year tends to be rather poor, but the December tends to be much better. If a Republican wins the White House, the November of that year tends to do pretty well, but the December of that year oftentimes lags a little bit behind. What are the reasons for this? Well, only the most studied of social scientists can tell you the answer to that. It's just important to know the trends and be prepared to take advantage of them if you're looking to grow your wealth. But that kind of brings us to this election year. Joe Biden won, presumably, assuming all accounts and things of that nature go his way. Why the euphoria in the weeks following the election? Bucking the trend of poor performance in November for Democrats in election years. Well, I think one thing that's going to vote in his favor and in the economy's favor is the announcement of Pfizer having positive results from its early COVID-19 trials. Again, this is one thing that nobody can really know. The stock market is made up of many participants, myself included, who have different psychologies, and who buy and sell for different, oftentimes varied reasons. But positive news on COVID-19 trials, along with good job numbers for the month of October, in addition to the large 33% GDP growth numbers announced earlier, all means that the economic news in the last few weeks of 2020 are likely to be positive and investors are going to respond accordingly. Well, that brings up a couple of questions that I'm sure you're all dying to know. Is it time for you to buy into the stock market now? So we should now have a pretty good understanding of the psychology of the stock purchasing public. That is, nobody really knows about the psychology of anybody purchasing stocks, and people really rely on good economic numbers to figure out whether or not they should stay in the market. But with that in mind, is now a good time for you to buy into the stock market? Keeping in mind that this channel, nor this video, should be misconstrued as financial advice. Both are strictly for entertainment purposes only. So with that little PSA out of the way, yes, now is a very good time to buy into stocks. Why? Because the best time to buy into stocks was 20 years ago, and the current second best time to buy into stocks was 10 years ago. The third best time to buy into stocks is right now. Sort of like that old saying, the best time to start on your diet was yesterday. The second best time is today. There really is no time like the present to start investing in your financial future. And now, today is no different than any other day. You see, one of the principles of increasing your wealth is time and consistency. Both of those things lead to positive gains. Well, in addition to that compound interest, but that's a result of both time and consistency. And that stated, there will never be a period in time in all of human history when saving your money and investing will not pay off for you, particularly if you do it consistently. Sure, there will be different vehicles introduced over the years to invest, and in times past, there was no such thing as a stock market, and you had to invest in livestock or farming as the way to increase your wealth. At one point, investing in tulips was all the rage. Leave a comment down below if that's something you'd like to see in the future, because that was sort of an interesting period in the history of financial markets. People really invested in tulips like it was gold or something. But in today's day and age, there are various investment vehicles that you can put your money into that can improve your financial situation if played correctly. They can include real estate, one of the more popular topics amongst finance-minded YouTubers like Stephan, Cardone, and Meet Kevin, among others. Investment vehicles can also include things like franchises. If you think about it, franchises and franchising is a little bit underrated in terms of increasing your wealth, in terms of a vehicle for increasing your wealth, that is. But think about it for a second with me. If you're selling on Amazon, technically you are a franchisee of Amazon's. You use their good name, their platform, and possibly their warehousing and other services to sell goods that you procure or make somehow. So it's a little bit like franchising with Amazon, but, not technically, I suppose. But yeah, don't sleep on franchising. Things like franchising restaurants, like a McDonald's or a Starbucks is more popular nowadays, or perhaps maybe something like, I'm trying to think of a good franchise here, that everyone wants to get into, like a Five Guys, something like that. Maybe more healthy, a health food franchise, things like that. But cryptocurrency, that's another popular investment vehicle. You need to watch out for this one, however. Trading currencies, no matter what form it takes, can be lucrative. If you're not generating money by selling a service or a product, you leave yourself open to the possibility of major losses. Just trading one currency for another really just sort of leaves you with money and not really value. So be careful with that. Another investment vehicle that's very popular is investing in startups using venture capital funds or even angel investing. Both can be very lucrative. However, to get started in that, you need to be pretty well off already and in a position where you can find quality startup businesses. And then there's stocks. You see, the great thing about the stock market is that pretty much anybody can get started investing. With all the great apps that are out there, it's never been easier for the average dude off the street to pick up and start investing their own funds. Whether that's through like a mutual fund or index fund or an ETF or a REIT, or through buying individual stocks. From your high-powered CEO all the way down to people on government assistance, you have everything you need right in the palm of your own hand. And that takes me back to the point. Now is the best time than ever to invest in stocks, because now you have all the resources that you need to take action. And not necessarily because the stock market is at an all-time high. In fact, that takes me to my next point. It might not be the best time to buy in. If you think about it, the stock market is at an all-time high. Highs which are likely to stick around for at least a few weeks, possibly even a couple of months. But because those prices are so high, that means there might not be that much room for them to grow. In fact, it could sort of stick around at the level that they are at right now. Or even worse, take a downturn. Remember earlier this year when stocks were at their all-time highs? And we had a big down tumble? How many people do you think got out of the stock market right as that happened? Or right at the bottom and did not hold on to their stocks and lost a lot of money? It happens. It happens all the time to new investors, particularly. You see, new investors tend to see stocks at an all-time high. And due to a fear of missing out, because they think to themselves, well, I really should be invested in the stock market. Let me take this time now that the stock market is an all-time high to get into it. Well, that can be a little bit of a problem sometimes. You see, they go get an app and they buy some stocks and things are okay for a while, but the stocks don't rise the way they expected them to. Or worse yet, they fall precipitously sometimes. And that's when they sell their stocks. And then they claim that the market is rigged, and they never buy another financial product in their lives, and they never achieve their financial dreams. So if that's you, yeah, now is not the best time to buy into stocks. You see, purchasing of stocks cannot and is not an instant gratification sort of thing. If you buy some stock today, you will not be Lambo rich tomorrow. Like I mentioned earlier, you have to give this thing time. It's almost like drops in a bucket. If you have a leaky sink and you put a bucket in there to keep your nice cabinets from getting moldy and disgusting and causing the value of your house to plummet, then you know that one drop at a time is not going to fill that bucket up very fast. It won't fill it up in an hour. It won't fill it up in a day. It may not fill it up in a week, depending on how leaky your sink is. But if the leak is consistent, then after a period of time, that bucket will fill up. Investing, like other good habits, is much the same way. Investing in the stock market one time today because you saw the Dow Jones Industrial Average or the S&P 500 was up the last couple of days is not going to make you rich tomorrow. In fact, if you take part of the money that you get from your job or wherever you get your money and you invest consistently over the next couple of months, you're not going to get rich. If you do that over the next couple of years, you're not going to get rich. But if you keep doing that over and over and develop the discipline to not pull out of the market right as stocks go down and buy in when they go up. But keep investing without fail. Then that bucket of dough that is, that bucket is gonna fill up. Well, that's all well and good. How do you get started? So me personally, I invest consistently in the stock market and in other markets and asset classes, whether they go up or whether they go down. For the purposes of the stock market though, I typically use index funds and ETFs as my vehicle of choice because both of those types of investment vehicles follow specific indexes depending on which ones you buy into. That allows me to have quite a diversified portfolio. I do also invest in individual stocks, but that does require more research into companies and trends and other things that will affect the price of that particular stock, company, or industry. But investing using index funds or ETFs is perfect for beginners to get started flexing their investment muscles and getting used to the ebb and flow of the stock market while at the same time being very diversified. So, if you're a beginner, consider going down that route. Now, keep in mind, I'm going to be publishing videos on stock market investing basics, what the individual indices are, how to invest in single stocks, what indexes and ETFs are, and much, much more on this channel in the very near future. So be sure to subscribe and hit that notification bell so you don't miss it when I do. Also, like this video if you liked this video, and drop me a comment down below with your thoughts on whether or not you should be investing in the stock market at this point. Do you think you can invest consistently even if the market falls in the near future? Why or why not? Curious minds need to know. And remember, a goal without a plan is a wish. A goal with a plan and no action is a wish list. Take action today on your goals, and I'll catch you next time. Peace.